you please? Could you please? Could you please? Could you please? And save the world? Could you believe in brighter days? Could you please? Could you please? Could you please and save the world? Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go ahead and get right into the chart, shall we? Bada bing, bada boom, here we go. So Bitcoin took a little bit of a tumble, but it was more or less to get out the 100x, and we didn't go into the fair value gaps just yet and bounce back up. What is this dotted line that I'm bouncing off of here on the horizontal axis here? Well, this is a previous daily candle close here, and something we broke through, so we're starting to reclaim some of that resistance as support by the looks of it on the daily time frame. Now if we go to the next resistance here, resistance, we broke down. Are we starting to break that next resistance level? We currently, for the last 2 days, were rejected here, and we're starting to break up above this. If we can hold above this 30,236 level on the daily time frame, this could be a reclaiming of this for daily support on our path to the upside. This is a lot of daily resistance that we're fighting over here that we are starting to battle our way up on in doing. This pitch fan has been quite nice to us. We previously held that 706 region and burst through the 786, and now we are in uncharted territories onto the 786 of this outer outskirts that we had to add recently on this pitch fan here. What is this pitch fan? Well, you get it by doing 3 clicks to your chart. Here are the settings on here. Oh, that's an 886 region. So you take the pitch fan and you can click 3 times, and you can kind of adjust these based on lows and highs and get price trapped within a diagonal fib region, which we've had since the last of January, when we were back here in January 17th. All right, so let's go into the heat map, shall we? And then we will get into the momentum. So what is the heat map? Well, that is when people lock their liquidity into the charts to be burnt to a crisp by the market maker for not using a stop loss and getting them to reclaim that money, getting burnt to a crisp. Let's see who's getting crispy today. By the looks of it, it looks like the shorts, the 100x here, are the ones getting targeted up above. Let's just look at what happened here at this spike. So previously, yesterday, when we started to come back down, we were talking about there's more imbalance to the downside in terms of these 1 minute time frame bubbles here, 368 million to the 225. So that's why we came down into this. We started to take out these 150x characters before starting to go sideways and shift back up to take these 100x. The problem is the 100x get paid 100 times their money. So when they get the 100x on one side, they like to get the 100x on the other. If we are in a consolidation pattern, which it seems we have entered. What is consolidation? It's when you go sideways, essentially, range trading, whatever you want to call it. It's a up and down price action swatting of the 100x. So we got the 100x, 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 and it looks like we're at the outskirts of getting the 100x. There's some 100x stacked up here in the region of 30,700 perhaps. Let's just zoom in on this entire range a little bit more. Let's do that, about there. So looks like you got some short guys underwater up here at 30,725. You got some short, same region. The induced pools yesterday at 30,800. That is some 50x up there, with the 25x partner in crime up here at 30,780. Are they going to go up in this immediate intention they've made to the upside on the hourly play here? Are they going to go eat this guy, this 100x 50 million character, and his partner in crime 225 million? Highly likely that we get to 30,000 Oh, it looks like we already took out 480, so that guy should be out right now. Let me go ahead and refresh this because the price does reflect that level. So it looks like we just scooped up and grabbed that short guy up above here. So this guy is now out of the game. $225 million off the table at 100x.
Fatality.
So it looks like they came and got this guy, and they're starting to head up higher to these other stacked up pools. So where do we start to fatigue? Let's go to the higher time frame to figure that out. We need to go to the liquidation heat map, and we will go to the 7-day that's already open here to save us loading power. We got to reload it because now that pool above has just been hit. So we just hit these pools here. Are we going to the 30,700? Well, this 7-day chart implies that these pools are stacked just above us, all the way up to 30,700 to be frugal. So we previously did come snap off that liquidity on the 1 minute time frame. Let's go to the 1 month. How y'all doing out there? Yo, 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 what's up? Yeah, shout out to my man and a lot of the people in the Momentum Master Discord. Link in the description. They are getting themselves funded. I will be joining them shortly. There's nothing like being able to trade off of somebody else's money and profit from that. So that seems to be the play to do these days. So on the monthly time frame, you do have some pools located above 30,700, 22 million, 20 million, 30,800, 30,900, 16 million, 15 at 31 even, and 19 million 31.1, 15 million or billion rather at 31.2, 9 billion at 31.3. So it starts to taper at 31.3. So 31.2 seems to be the region. I think this was what we were talking about yesterday as well. So this kind of liquidity being caked up to the upside does suggest we could go up to $31,200. And then it starts to taper just a little bit for the interim. Going beyond 31,002 doesn't make sense on this time frame. You do have some liquidity stacking below. It looks like their stop losses or the liquidation points are quite low. A lot of heat being generated down to 22.5 to be safe on the long liquidity. The heat is not increasing in these regions, but more or less on the lower regions, so the stop losses are being added down below on the monthly time frame. Let's look at the 3 month. So the 3 month, we had previously gone to the 30,600, cleared that region. We are just clearing some regions of recently caked up liquidity here on, for instance, this time we hit it before. So going to the fourth time, 1, 2, 3, fourth time hitting this pool to the upside. These pools on the 3 month are starting to get something down below here. Not yet double digits, except down here at 29 even. So 29K has 12 billion here on the 3 month time frame. So you do have that suggestion to 31.2 because you have 33 billion at 30,800, 36 billion at 31,000, and 31.2, $32 billion. So once again, on this 3 month time frame, as you clear this pool, do you have the intention to keep going up to that 34K region? These pools are above us, but once again, these happy campers beneath 19.4 are in the $300 billion range. So do they like to come back to those stacked liquidity zones at 22.6 and 25K? There are hundreds of billions of dollars down below. At some point, are we going to inverse? Are we going to Bart Simpson down and start to make our intentions be clear to come get this at some point? Once again, this is a game of traps. You do see inverse Barts and Bart Simpsons all the time. If you don't know what a Bart Simpson is, I suggest you look it up. So Bart Simpsons do occur. So you do have this thing where you make Bart Simpson's head and just spike right back down once they get what they've come for finally. Whereas that region that they come for, I don't know, but they have done that in the past where they leave some liquidity in the charts and they don't necessarily take all of it. All right, so does that mean they come all the way up to 31.2 and take all of this and then come down and be very clean with it? I have no idea, but if they allow everyone to hit their sell orders of where they want, then they don't leave them as targets as they come back to get this stuff. The key is they want to take these guys out who haven't paid themselves. They don't want to allow them to pay themselves completely. And so when they induce the max amount of pain into the short group, that's when they will start to head back down into here. So this 3-month time frame is interesting to me because that's a lot of liquidity down here on this time frame. Now as you zoom out and look at the bigger picture in the 6-month, then you'll start to see once again the sub 19.4 region does have a lot of caked up liquidity, even all the way down to 13k, and yeah, you still have that below. But when we step to the yearly time frame, you start to add more pools above, and you start to see the narrative of potentially going up higher to 34.8 up here. So you start seeing 60s, 80, 68. Here starts to get sparse 23, 18, 52, and 96 billion at 30,800. So the path to 34.8 with $84 billion does become apparent on the yearly time frame, and this below gets put into perspective where it doesn't seem that bad. So if you're looking at a yearly chart, then this coming up to this 34,800 region doesn't necessarily seem strange on this chart. Alright, so that's kind of interesting to say that this path is starting to be paved to that 34,800 region. Yeah, so that's about the liquidity in a nutshell, as quick as we can give it to you. On High Block Capital, about $70 a month, but we provide it to you here each and every day for free. So let's go into the fibs, shall we? I'm going to just leave this one open really quick. Let's go to the fibs. So we got the diagonal fibs. We're coming back to that previous zone. So let's go to the regularly fib scheduled program. So we were marking the characters that we were seeing down below into these vector candles that they might recover back down into. I think we left the thing still in the charts, so we were saying it could come down back down into here, which it did not make its intention known. We did see on Momentum Master, let's just throw that on really quick, we'll save you time with that. We'll just flip it on, and then we'll flip it on here. So one interesting thing to note is we are at the even Steven range of this cross down. They're playing cross down, cross up, trying to decide whether this cross up is going to remain in effect. If this becomes a sell-off wick, then the cross down will be the idea to think about on the 6-hour time frame. Previously we had that front run here before it started to come down a little bit, so you could have taken that off of this candle close here and seen some play of that pullback. At least, what is this baseline? Well, you go to momentummaster.info and scroll down to features, read about the baselines yourself. You'd see it's a leading moving average formula which does predict these things. It looks like we got some recharge off the upper end of the Keltner channel, and then we started to come back up. Now if you collapse to the lower time frames here on the hourly, this also happens to be a 706 region of the bullish trend base fib extension level, so we got that support confirmation on that and bounced off of the 706 of the bullish trend based fib level. So we were seeing this reclamation and the baselines recaptured here on Thursday, 8 o'clock in the morning my time, and you could have followed this up nicely with the kiss to the cloud after breaking through, kiss and continue to the upside. So we're seeing this thinning of the cloud and that continuation occur as we got bounced out on the hourly time frame. So this was your hourly play. You had previously seen the money flow start to come back out beneath the RSI. We've talked about this many times, where the money flow comes beneath the RSI and then likes to gravitate back up to it. So that's what occurred here. We gravitated back up, kissed off the cloud, and we were gone. So we're starting to see this shoot up here and eat up some of the liquidity. Let's go look at the liquidity as it gets gobbled up and see who gets burnt to a crisp. Here we go. So they spiked up into these pools, starting to get into the stacked region. So let's see. Where is that? Let's load that again. It spiked up ever so briefly, so let's see what it did. Looks like we're getting some bubbles of longs entering here. This is not where you want to enter a long. You're seeing 164 million enter off that spike up there in long liquidity. That's starting to create an imbalance in longs now as they start to cancel the shorts. Longs are starting to enter, which is not good for longs here. So you could consider taking profits, because these bubbles at 29.34, 30,000 and 30,270 are starting to beckon now to the downside after gobbling this up. There is an imbalance just off that immediate surge. By taking out these characters, the 100x, now you've just allowed these others to enter. So we could see some retracement down into that, grab that 100x at the bare minimum at some stage soon after clearing these pools. How immediate is that going to be? It could happen immediately after getting this to occur. You have a 100x character down here, and you also have one that was induced in this region. So there is an imbalance starting to form after they clear the pools. Here too, 139 million at 100x versus the 86 here. So once they took out this guy, this is now a clear imbalance in the charts that they could come back to. These bubbles do start to stack. Where are we in the cycle for the week? We are in Thursday. So Thursday is midweek reversal day. So is this reversal to the upside and a continuation? Midweek reversal also plays into Friday, which is Run for Profit Friday. So by run for profit, that means people who are in profit should run for cover, and they also, the market makers, want to run for where the profit lies. So we've been putting out these levels for where that retrace would occur if they would come back down. Are you getting an extended M formation here? What do I mean by extended M? Well, that means that it extends beyond the first M thing. So you could look at this as a first M down, and the second one could be higher, slightly higher, to target the stops of the first pool zone here. So they're starting to target the buy side liquidity of the shorts that entered in the first leg of the M. So during bullish phases, they do a lot of extended M's these days. You can see shallow ones like down here too, but this seems to be the play for when they do M's. They like to really squeeze the shorts before then dropping it on them. So I'm not going to say that's what's going to happen, but that's what you're looking at the exact immediate time frame based off of what just entered right there and stacks all the way down to 29.34. So these bubbles still are on the table by the looks of it. So these things do need to be thought about as the 100x get taken out in shorts. As they have to pay less to shorts, that's when you start looking at shorts. It's kind of counterintuitive thing to think about shorting as it's going up, but if you're smart and methodical about it, you can do wonders by finding those sniper entries on shorts, and that would be where you would look for it. So not financial advice, of course, just talking out of my anus. So here we go. Let's look at the 4 hour. We got 49 minutes for the 4 hour candle close. How much of that stochastic is going to be added to this? We have currently at the value of 35, 32-ish on the K line. So where does that go after 49 minutes? Does that K line give us up to 64, give us 30 points of value? That is the question. How much of all these candles added to the current candle does it give us that probability boost? Also, the money flow being beneath the RSI was a bullish sign in terms of the money flow liking to gravitate back up to that RSI. Similar fashion, when it's above the RSI, it comes back down to it. This is Momentum Master B. You can go to momentummaster.info, scroll down to the B category, look at the money flow, read about what that's about, and the strength and all the different oscillators we have within the Momentum Master B oscillators. And yeah, so we still have that 4 hour cross down confirmed. How much of that do they give? We've had cross down events that purge down a lot. Could that have been the only purge that we saw for the 4 hour, or are we going to get another one? We haven't seen the cross back up on this, so there is no bullish confirmation just yet on the 4 hour time frame. Are we going to see this come to fruition? The one thing to note once again is the 6 hour. The 6 hour cross up has just been negated. We had previously a cross up which was trying to negate this cross down. This cross down was confirmed on this candle, so the current leading baseline is telling you that this is, if this candle closes in the state where it's not crossing back up to negate this and create some ambiguity, then it's not ambiguous that it's calling for a retrace, and this could just be a stop hunt rise before it drops for setting up for Run for Profit Friday. So we'll come back to this. We already know that the move is happening, so let's go to the S&P and see how that was working. So let's go to the hourly chart. So one of the interesting things to note was we were calling for back here on Thursday. We were saying it's going to rise back up to this and possibly continue to the downside, which it did, but it didn't go exactly to the level we talked about. It went to the 618 and bounced, or just below that, to the 786. By the looks of it, this is the 786 level. If we just turn on the basic for this, yeah, the 786. So it bounced off the 786, not down to here. So we were accurate insofar as it went up to this level, and then it came down here. Pretty accurate, not bad. And we're coming back to that nice, we gapped up and we came back up to that pocket from before, which we were talking about as the fair value gap range. And it looks like we're gapping up to continue for that liquidity of the stops. Let's go ahead and see what we see here. One thing to do here, if we're trying to think about a retracement, is we can take this idea here, this fall and retrace idea. This contains where it would want to go if it was going bearish and you wanted to see it go to these regions. Okay, these are the levels you would look at. So I'm going to, so you saw that 618 bounce on the S&P. So in terms of this gap up, this entire gap region, could be something we gravitate back to, but the hourly time frame is just getting started by the looks of it. So you had this W formation which failed, and we came back down into the 786 of that failure and bounced back up to take out the stops. So it's basically consolidation. I'm going to clean up some of these fibs and consolidate them together and try to make a comprehensive image. I'm going to hop into my simulated trading account to get funded for stock market trading. So I'm going to start thinking about this in more detail. So I'm going to take this more seriously now. So let's just take a look at the S&P, shall we? All right, so if we just go to the low of this range, this would be your range trade idea. So you just go into the Fibonacci here, set this up as a basic idea. And so you're over reaching the 786 of this retrace. You look for longs at the 236, take it up to the golden pocket at the 618. And this is how you would look for a premium versus discount. Your equilibrium of the range is at 41,101. From this range here, so we're going to delete this really quick, and then that's equilibrium. Let's just call it equilibrium. And we'll make that color equal. It's not green, it's going to be orange in the middle. Yellow can work too. Let's do yellow. Save as equilibrium. Boom. Okay, so that's the equilibrium of this range at 4101. So we're currently at a premium level for this local range, so you'd be looking for some sort of short opportunity in the pattern here. We are breaking back up to take out some buy side liquidity by the looks of it. We're gapping around all throughout Wednesday, Thursday was the retrace kiss to the cloud idea. Looks like we found that cloud for support, and the 15-minute and the hourly play is starting to play out here by the looks of it. 4-hour also possibly playing. One thing to note, I believe, if it's similar to Bitcoin, is the 6-hour and the 12-hour getting overbought. No, the 6-hour has reset on the S&P, so that is a bullish sign for breakout potential, at least to get to the high level to see if it wants to take out this pool up above here. Okay, doesn't want to take out that pool. So we are currently in the bullish scenario of this impulse retrace idea, the bullish trend-based fib level. We are currently finding that equilibrium support on that one level of this here. So this is where they would be offloading their positions of their longs and reconsidering to entry down below off of the 786 levels. We have yet to go back to that level to bounce off and recover this candle on the 6-hour. Fair value gaps appear on different time frames, but you get more precise as you go to lower time frames. So another area to look at would be this gap down here. I think we were talking about this before. So at some stage it would like to come back to retest that level. Okay, and take out this pool that has developed. The rounded out price action has provided you with that cup and handle idea to continue higher, and it looks like it's playing out so far with that hourly time frame. All right, so let's go to the dollar. The dollar was dropping through that bottom we were talking about. It fell right through to the absolute double bottom, all that bricks, FUD, and everything. The dollar is reaching that double bottom level. It didn't do a shallow one at all. It's now down to here. on the daily time frame. So if it breaks below this level, you can go down to these next levels down here. Let's go see where that is in conjunction with something over here. Yeah, that daily support, next one is at this point from April 1st, 2022. There's a lot of daily support areas here. Happens to also be the 5th level of the 1618 region, so that could be a potentiality that could occur if the dollar breaks this range. So you're highly oversold on multiple time frames here for the dollar. Will you see a bounce? Is Run for Profit Friday going to be a upside play for the dollar and retrace for a lot of these upside assets? Just something to think about. Do we retrace back down in here? On higher time frames, you have seen some hits to some high levels here. Let me just save this. So if we hit that high level, take out some of the stops here, you could even come up to this idea and take out some of the stops, do that extended M, and then start to retrace back down, similar to Bitcoin. Come back up to here and then start thinking about coming into that region a little bit. On the hourly time frame, we do have a gap down below here as a potential interest level. How much of that was recovered? Looks like not much. So we do have a gap down there, and we have a gap right here on the 15-minute. 15-minute getting overbought. You could see at least a retrace in the immediate down to the cloud to continue higher on the S&P to recover this gap on the 15-minute candle. Inverted head and shoulders maybe to go up to here. Inverted head and shoulders pattern for the hourly 4-hour play. So the 4-hour play will take you possibly to there, but interim 15-minute reset down to the cloud, and then continue to there, which would put you in line. That's a little bit late in the day for Friday. Is Run for Profit going to be to the upside? It's possible. Is Run Friday going to be that profit thing setting up for next week to be a retrace? Interesting. Playing it day by day, level by level. Bitcoin seems to be front running the idea. Already made that push to the higher high. Now our higher high is reached at 596 level on the Binance chart. So we did take out that 600 pool. Let's reload this really quick. Shout out to everyone here. Thank you for stopping on in. 7 concurrent viewers. Love you all. Thank you for coming on in. Appreciate you all. I love everything. I love this moment. It's sometimes everything is this kind of amalgamated data ball, this energy ball that we all kind of participate in. That's why I always say thank you for coming on into this the live and sharing your essence with me in this eternal moment, because we have this eternal moment we share, inescapable, so inextricably linked. Inextricable means you cannot be extracted. You are stuck. whether you like it or not, you're here in this moment forever and ever. I find solace in that fact. I think that's very beautiful. So even if you die, you're not really going anywhere. It's nowhere at all. Alright, so yeah, where are we here? We got that sell-off that came back into that pool. So it looks like they're starting to come back into that imbalance we were talking about. They most likely took out the 100x, see? So they came back, while we were surging up, we saw this and said that they would likely come back. If you were in a profit at that time, you would consider taking profit or even entering a light short, because coming back to these 100x is highly likely. If there's more longs than shorts on 100x terms and they've created a liquidity grab, then that surge back down is not out of the realm of possibility. It is almost guaranteed. And then as they go into the lower lows, people start to FOMO into longs. So there's more longs entering here, creating a double stacked whammy, a double whammy of juiciness for them to burn to a crisp. So are they going to come back down to the 30k region and take out these pools in conjunction with the 100x pools that are lined up with it? This is why the colors are important in knowing what the orange and the red mean. So you have 100x stacked with 50x here becoming a target. And this 100x character, if you go to the left a little bit, you see what their values are. So what does that stacked amount mean? That's $139 million on top of 143 and 164 million. So in the immediate 1 minute time frame region, does going any higher than this make sense, or does coming back into this make sense? Now, if you can't make sense of these bubbles, look to the right. I call these noodles because they're just lines representing the volume in hundreds of millions. So the length of the noodle determines how much value it has. And so you see the orange 100x here, they cleared out all of the short 100x, so there is more broth now here. The gap has been shown that there might be interested in coming back into these noodles down below. And so the length of the noodles, you do have a long noodle here up above at by the looks of it, kind of 30,760 region. But you still have these long guys that we were talking about since yesterday and even before yesterday that are still open. So are they going to allow them get their sell fills up here, or are they going to induce the idea and start to Bart Simpson down to grab them before Run for Profit Friday? I have no idea, but this looks mighty juicy to me if I were a market maker, because that total is now at $20 billion in imbalance to longs. So are they stacking up the narrative to knock out the shorts before they start to come back into these regions? It's what you should do if you're thinking about it, is knock out the guys getting paid the most, the 100x, before you start to come back down. Now, there will always be people who sneak in the back door at the end, but as long as they take out the majority, it doesn't matter to them. They're going to allow some casualties on their side to take out the majority, because the house always wins. So we are reclaiming this 786. Are we trying to confirm it as support to go higher into those external liquidity pools? So we've currently taken out some of this region up here, this buy side liquidity range. Ranier put out a good video yesterday. I suggest you check it out on buy side and sell side liquidity. Why do they use buy above and sell below? It has to do with the side that's being targeted to be taken out. So shorts get taken out and they end up having to buy at a loss. Longs end up being taken out down here, so they have to sell at a loss. So they call it sell side below and buy side above. These are kind of smart money concepts that will have you scratching your head about the games and the traps and the tricks of the market maker and how they induce liquidity into the charts. So this cloud was pretty interesting. You had double cloud kisses. So if you were in this, shout out to you. You got these nice confirmations on your trade throughout using Momentum Master. You got the alerts to your phone throughout the whole process. and you're getting fatigued on 5 time frames. So what are the 5 time frames? Well, the 22 hour is getting kind of spent. We didn't really go through all of the time frames per se, but 22 hour could double top on its close in 6 hours and 30 minutes. We could see one more surge here, who knows? Although the candle volume signifies it was blue just a split second ago, stopping volume candle, but 22 is so broken I don't really read it for that personally. 12-hour volume also dropping as price is rising. You're getting a little bit of bearish divergence potentially forming right now, Class C, as it's rising in price volume. So you could see this start to open up and drop back down. Maybe this last surge, it closes in 8 hours, so this coincides with the daily candle close. And you go to the 6 hour. 6 hour was coming down here. It closes in 2 hours and 29 minutes. Is it going to curve up here? Once again, you have this already confirmed cross down event, which is leading. Let's just go back and show you the last time that happened. So you had a cross down here. We didn't really manage to drop so much, and then we got a cross up event, and then we shot up out of that. So each one of these does come before the storm on each side. So you had a cross down and then we dropped, cross up and we surge, cross down and we drop. Now some of them are abrupt, so you have a cross down event, we dropped down to here, and then we came back up and then had a cross up, and that got sideways. So but you do go up from that point, and then you cross back down and went down from that point too. So each one of these has been front run. There are certain ones where it drops and then continues higher before eventually fading, and you never got it cross up. It just kind of meandered around and then dumped down from there. So it could be one of these dealios. This was back in March. But interesting to note nonetheless. Let's look at the 8 hour. 8 hour time frame, similar to the 6. All of these have the Williams overbought too. A lot of the oscillators are in overbought status. Closes in 27 minutes. We're not going to stay on for that long, I think. I want to get into the charts for some trades on the stock market today. So yeah, that is, this ATR is coinciding with this pool too. Once again, Run for Profit Friday is just around the corner for Asia. Asia, how will they open this day? Are we looking at the extended M idea down to below? Is this candle going to come back into this region of the 786 and just become a sell wick? I have no idea, but interesting to note that that imbalance of 20 billion does exist if it chooses to come back down. If you look at the bullish scenarios here, so it looks like you have to hold the 786 to start to think about coming into these regions. So if you don't hold this region at the 786, then coming up to here may not be the play in the immediate if you break down beneath into these regions. So this track, which I like with the piano, is signifying that we are reaching a certain time frame, which is to say we might be bidding you adieu soon. Let's see how everyone's doing. Hey man, gotta go, gotta live in the present and be happy, for sure, for sure. That is true. What's up, Snowman? How you doing? So yeah, I want to go join my Momentum Master crew and try to figure out how to get this. We finally got the funded account set up. It was such a pain because you need I'm on Mac obviously by these icons, so I had to get a Windows virtual machine setup that works, and then I had to install NinjaTrader and a bunch of other stuff that has all these bugs and hoops to jump through. So it literally took 10 plus hours of finagling around to finally get it working. So now we can do the simulation and get funded. So we'll see. We'll keep you posted on that. Yeah. So the hourly is. Wait, so we closed 35 minutes ago, so how long have we been live, actually? Yeah, it's been like an hour, okay. So we did catch that one, we did catch the hourly close. So we were talking about, where was that, the 4 hour. We wanted to see the 4 hours stochastic and how much it gave. It was at 35, I believe. Wait. Am I tripping out? I thought I saw something that was like 35 minutes, and maybe that was a stock market candle, because their hours are off a little bit. Yeah, I must be tripping. But once again, don't get euphoric too much. I mean, going all the way up to this region, the liquidity does suggest that there is stuff up to 31.2. So this narrative up to 31.2 and hitting this region at the 1 is not out of the question per se. But beyond that point, I would say they'd induce a little bit more after that time. These diagonal fibs do play out because they get into these ascending channel ranges if they're bullish, and it's kind of going up as it goes sideways, if it makes sense. So are we seeing this new channel form? We put that out at the beginning of, as we were breaking out here on Tuesday, we were saying, are we going to kind of range around in here before we start to break down? That is the question. Will we see stuff like this, where you start to kind of meander as you make your way back down into these regions? Nothing happens overnight, although sometimes it does. Alright, so we're just looking at the time frames, getting overbought here. 4 hour does have play, but however, the thing is that you always need to take note with Momentum Master and the oscillators we chose to put in is that the Williams, which sometimes suppresses the price, is when it gets overbought here and you try to take off on the 4 hour and then you get dumped on. Why does this not see itself beyond the 50 region on the stochastic RSI? Well, your Williams was overbought. So you're in the same region here. So if the 4 hour doesn't make it above 50, you could see that suppression as the Williams wants to reset here. Now this happened back here in March 20th, and we didn't dump that much, so it wasn't super massive. But why did stochastics go sideways and not take off? As you reach certain outskirts of price action, of this, and this blue volume, if it remains blue also in the 21 minutes, this indicates a stop hunt volume candle. So in the PVSRA strategy, this is what these colored candles represent. You have normally 3 green candles to the upside, and then you have a stop hunt candle and then a reverse. So is this blue a stop hunt candle before you start to come back? We had a previous purple one of a stop hunt for longs, and then we shifted out. So the blue is less, it's more volume than the gray, but not notable as the green. So it starts to suggest that that could be a stop hunt idea. Once again, this daily resistance level, to reclaim it, you'd have to be above it. But we also, if we close the daily above this level as well, then we've just SR flipped that to continue. So those levels of looking left and finding out where the daily time frames closed to find that daily time frame support, those are really the only support lines I'm interested in, is daily time frames. So that looks like that coincides with these fibs very nicely, the 786. So you want to see if you're reclaiming this on a daily candle close. Otherwise we could start seeing some retrace into these pools below. So the levels are the same, unchanged for what juiciness is locked below. They cleared the 100x, so that looks like that was the play, and they're going into this induced long idea for the interim, at least into the 100x level at 29.95, and see where we go from there. So they will likely go back down to the bottom of the range at 29.95 and clear out this 100x pool, which is stacked quite nicely as these noodles gather for slurping. So that's where we stand for now, and that's my story, and I'm sticking to it. Nice tip on the Williams. Yeah, thank you. Oh my god, I'm so happy you finally got that done. Yes. That was a pain, but it's always painstaking before the final release anyway. So all right, ladies and gentlemen, I will bid you adieu. Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and I will catch you guys on the flip side. Let's get it. Peace.